Good afternoon, everyone. Happy Monday. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. Breakout Investing now 5 days a week on TFNN from 3 to 4 Eastern. So be sure to tune in and give me a call as well. 877-927-6648. Appreciate those of you that call in when you can. So the number to use again is 877-927-6648. And a reminder that you can get my show on iTunes. If you can't listen live, it is available as a podcast. So check it out over at iTunes. And don't forget, you can listen to all TFNN programming on your smartphone. All you have to do is type in tfnn.mobi, tfnn.mobi in your smartphone browser, and you can listen to the stream that way as well. Looking at a chart right now of the NASDAQ Composite in Tiger TV. If you want to look at charts live right along with me, do it on Tiger TV right on the homepage of TFNN.com. Channel 1, the show is carried live, and Channel 13, the show is archived. And you can also watch Tiger TV on your handheld device as well. So taking a look at the NASDAQ Composite, what have we been saying in recent days? Markets are really not doing anything wrong here, and that is once again the case today. The Composite, after hitting an intraday low of 29.99, it is back up near its session high. Call it about 3,020 at this point, down just a little bit less than 1 point, but just kind of moving tight sideways in light volume here, sitting very close to a swing point. So really not seeing anything wrong with the market here. S&P 500 really showing similar price action to the NASDAQ Composite. The bogey right now up near its intraday high after hitting an intraday low of 1397. It's up at 1403, trading in a tight range today, down almost 2.5 points. Again, 1403 the last on the S&P 500. And we'll check in on the Dow Jones Industrial Average. It is down 40 points, 0.3%. So it's underperforming today, but still holding on to the lion's share of its gains last week. Dow recently at 13,168. The bulls are looking for a low volume market decline here, and that's what we're getting today. This is just a very resilient, very stubborn market. There aren't any sellers around. Not a whole lot in the way of buying demand either, but the most important thing is that there aren't any sellers around. So we're seeing fairly constructive action in the major averages. Volume Friday on the NYSE very light at 556 million shares. It is even lighter today, tracking about 10% lighter on the New York Stock Exchange, and same with the NASDAQ, about 10 to 12% lighter. We had 1.54 billion shares trade on the NASDAQ on Friday, and again, tracking well below that. So just kind of a low volume, orderly pullback here. And the market is not looking too bad here. All right, taking a look at some story stocks today. Let's check in on shares of Google, GOOG on the NASDAQ here. Big day for Google, up $16.80, 2.6%. Got a little juice behind the move here. Last price on Google, $658.80. Let's go ahead and check on a weekly chart for Google here, and we'll see that this is a stock that working on, let's see, 1, 2, 3, 4 straight weekly price gains headed into today. Still has not quite broken out yet. So you've got this big long base forming here in shares of Google, but still a breakout that has not truly taken shape yet, despite a heavy volume advance for the stock today. Google said earlier today that it will cut about 4,000 jobs at its Motorola mobility wireless phone business. It will close or consolidate about 1/3 of Motorola's 90 locations. 2/3 of the job cuts will take place outside of the U.S. That means 1/3 will take place in the U.S. And according to Google, Motorola Mobility has lost money in 14 out of the past 16 quarter. So not good to see more job losses, but Google's a strong performance today. They're getting leaner and meaner, and this most likely is going to help profitability going forward. And I think Google also got an upgrade today as well. All right, let's take a look at shares of Salesforce as well. Salesforce.com. It's outperforming nicely today, coming really been in rally mode for the past 7 trading sessions or so, up another $5.73 today, a little over 4% to 145.57. Not a big fan of stocks coming off their lows like this. There is a little bit of volume, a little bit of juice behind CRM's move today. Interesting note today from Piper Jaffray, said the company recently landed the largest deal in its history, an unexpectedly large deal that Piper Jaffray said is worth more than $140 million. Piper said that we wouldn't be surprised to see Salesforce raise its earnings outlook as a result of the deal. Again, this is a Piper Jaffray note that came out. Piper has a $207 price target on CRM and overweight rating on the stock. So give credit to Salesforce. I mean, they really are the in the cloud-based software space. They arguably are one of the top performers. Their sales growth has been very, very impressive. Top line growth very impressive in recent quarters. Over the past 4 quarters, you've seen top line growth ranging, basically between 36% and 38%. So they're selling a lot of product. They're highly profitable. And, it's a high multiple stock, but it is still a stock that is still a ways off its high here. So it's still going to have some overhead supply as it works its way higher. The left side of its base started all the way back in late April in this area here. And there you're talking the stock was right around $165 a share thereabouts. So a lot of people, were buying on the way down here. As the stock rallies, it should face some selling pressure as it works its way higher, but still, Salesforce up nicely over the past 7-8 trading sessions, and seeing some renewed buying interest here as well after some fairly significant distribution in the stock. So good day for Salesforce. Let's also check in on some other story stocks today. BKS, this of course is Barnes & Noble. Over the weekend, the company said it is going to cut prices on its Nook tablet and also Nook Color to $179 and $149 respectively. News isn't helping the stock much. Shares of Barnes & Noble down 36 cents, 2.5% to $13.95. Checking in on shares of Pfizer here. Some news around Pfizer. We'll see that this stock is down 19 cents, almost 0.8% to $23.75. Pfizer plans to spin off its animal health business through an initial public offering. The business earned about $245 million last year on $4.23 billion in revenue. So this is a big business for the company, but Pfizer has been looking to divest some of its non-pharmaceutical businesses to, enhance shareholder value, increase profitability. Last spring, Pfizer sold its infant nutrition business to Swiss company Nestle for almost $12 billion. So watch for the IPO of Pfizer's animal health business. No date on when that's going to happen, but that was news from Pfizer today. Let's also check in on shares of Focus Media Holding, FMCN, Focus Media Holding. Stock gapped up today, up 8.3% to $25.33. Focus Media Holding was a one-time big winner in the market, and frankly, when you look at recent earnings and sales growth at this company, they are, still growing very, very nicely. They have good earnings growth in recent quarters, good sales growth. They operate an outdoor advertising, liquid crystal display advertising network in China. So you look up and you see these ads. A lot of that comes from Focus Media Holding. Anyway, the stock is up big today on news that a group of investors has proposed taking the company private for about $27 a share. Again, Focus Media last trading around $25.33, up a little more than 8.3%. talking about strong growth at Focus Media. They're going to be coming out with earnings later this month. Not confirmed earnings date yet, but it should be around August 20th. Earnings are expected to be up 32% to 58 cents a share. Sales up 25% to $223 million. So, this being a China company and with the technical disarray of the Hang Seng and the Shanghai Composite, I mean, just a pretty bad bear market going on there. Focus Media has been hit pretty hard. This was a $37 stock a little more than a year ago, back in May 2011. It was really a super strong performer in 2010 and into 2011. But then, after hitting a high of 37, it corrected sharply, has been working its way back in recent weeks, and still good fundamentals here, but valuation wise pretty cheap stock. But the fact that it's just a China company has weighed on shares recently. Growth names continue to be under pressure in this market. I mean, it's still a tricky market. I read a growth stock newsletter at TFNN called Ultimate Growth Stocks. I took profits in a couple of names today, so I have 7 stocks in my model portfolio right now. But when I go through my screens on a daily basis, it's never easy. Looking for real high quality, institutional quality stocks under accumulation with top fundamentals. It's really a small universe out there of stocks that fit my stringent criteria. And when you do find them, you see some that are underperforming, and that's because when you have all this money on the sidelines still, and in this overall low volume market environment where the big boys generally aren't playing, it's not quite the right environment for this risk-on trade to be working. Some of the higher beta names to start leading the market. We've seen money go into the dividend-paying stocks, the Philip Morrises and things like that, But so it's still kind of a tricky environment for growth. A lot of growth name like TripAdvisor under renewed selling pressure today. This is a stock that really got hit hard by earnings back in July. It's down another 5% today to 33.34. Monster we've talked about. This is the used to be known as Hansen Natural. Stock has just been under a tremendous amount of selling pressure over the past 4 sessions, down another 2.9% today to 52.72. I would certainly be very cautious about catching this stock on sale. And then some heavy volume selling today also in Cardtronics. This is a stock that had been showing pretty good relative price strength. It's a small cap company. They operate a network of ATMs around the world. Takes out its 50-day moving average today in heavy volume. Cardtronics down 4% to 29.35. And then you've got Mellanox. This is the Israeli chip designer. Has been a big market winner. Signs that this stock might be ready to consolidate gains a bit here. Volume not huge, but a little heavier today, down 3.4% to 108.31. Still holding well above support levels, but seeing some growth stocks under pressure today, folks. Okay, headed into the first break. Thanks very much for tuning in. I'll be back in about 4 minutes. You're listening to Breakout Investing on TFNN.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back to Breakout Investing on TFNN. Before we went into break, talking about some growth names under a little bit of pressure today. Mellanox Technologies down about 3.4% to 108.31. Still not showing meaningful sell signals after a huge price run in recent weeks. CTRX, another name that is starting to look like look like a pretty good short, actually. You can see resistance at its 50-day moving average. Stock is down another 2.8% to 88.14. So certainly its recent lows around 84, 85 in play here as the stock gets turned away from its 50-day moving average. Catamaran Corporation used to be known as SXC Health Solutions. And when it broke, a lot of selling in this stock recently. You can see it broke below the 50-day moving average here, tries to rally back up, gets turned away, and some more heavy volume selling in the stock today. So this one is looking quite vulnerable here. Another growth name that, boy, a lot of fund managers like, but is really looking vulnerable here is MasterCard, ticker MA. See kind of an erratic looking daily chart here, showing kind of questionable action along its 50-day moving average here. Not clear to me at all that this is going to find support at the 50-day moving average on the daily chart. Let's swing over, take a look at a weekly for MasterCard, and we'll see a stock that is... that's actually not the chart I was looking for. Let me go ahead and just grab it here. All right, here's the weekly for MasterCard, and you can see here, after a lengthy run-up, okay, big run for all of 2011. We kind of hit 2012. It's basing, it's consolidating. Buying demand really seems to be drying up in this stock. That is the bottom line, and after a big run-up, when buying demand starts to dry up, it just makes it easier for sellers to, regain control, and they are in control right now in MasterCard. So this is a stock that I would avoid for the time being. Okay, 877-927-6648. We're going to go to my old stomping grounds in Boston, Massachusetts, talk to Lewis. How you doing, Lewis?
Not too bad. How you doing?
I'm fine, thank you.
Thank you. Yes, I'm looking for Fusion IO. What would be a good entry point on that stock?
Fusion IO. Okay, you don't own it. You're looking to buy it here.
Yeah.
Yeah. Well, I'll tell you what. It was definitely a game-changing earnings report last week. Okay, so I'm kind of coming back around to this stock again because the volume. I mean, this is a stock that had a very, very high short position headed into earnings. So I think a big reason behind that strong move on Friday was probably more short covering than new institutional money coming into the stock. But that's okay because I like the way it's trading today. You see, it's really not giving up much ground here. The key for Fusion IO, Lewis, is it going to be able to hold above its 200-day moving average here? I don't know if you kind of look at a daily chart, and I have it showing in Tiger TV right now. Okay, so it's kind of holding its 200-day. I would give this stock a little more time. If you were to nibble right here, I think it's probably a little higher risk entry point. I'd like to see it move sideways for at least the rest of this week. See if it can hold above that 200-day moving average, and then maybe on another heavy volume up day, then you can nibble and start a small position. But I'd still wait a little while longer on this one.
What would you be looking for? Another high volume day?
On the day that you would buy it, yes, I want another heavy volume up day where it's clear the stock is under accumulation. I'm not buying during low volume lackluster days. I want to see more signs of accumulation in the stock. Again, Friday's performance was compelling. It was bullish, but that was a lot of it was short covering. Let's see if funds are really interested in kind of re-embracing this company's growth story again. If that happens, you should see continued signs of accumulation in the stock in coming days and weeks. So the story has yet to play out. Right now, it's just a matter of will it be able to hold above its 200-day moving average. If it's a strong stock, I suspect it's going to be able to do that. So that's what you want to see. You don't want to see it. You don't want to see it break back below that 200-day moving average.
25.59, is it?
Say it again.
The 200-day average is 25.59.
That sounds 25.59 exactly.
So you could put a stop right underneath there.
Right underneath 25.59, and wait for renewed signs of accumulation. Okay.
Okay, thank you.
All right, Lewis, thank you very much. All right, folks, headed into our next break here. We'll be right back. Breakout Investing on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing. Thanks to Lewis in Boston, who just called about Fusion IO. We went into break and didn't feel like I had enough time to wrap up the call here, but my final thoughts on Fusion IO, like I said, I think the company's earnings report late last week was very strong. They had a nice acceleration in revenue growth, up 49% from a year ago to a little over $106 million. The company, it was actually a pretty bullish conference call. It's a high multiple stock, but it is an interesting technology. They do storage memory platforms used to decentralize data on networks, make networks run faster. I believe at one point Steve Wozniak was the chief scientist at this company. I think he may still be. But if you're thinking about buying, right here at $26.74, this would definitely fall under the category of an aggressive. This would be an aggressive buy because you had a big gap up. I know some people say that gaps always have to be filled. There's a big gap between 22 and 20, 25, 26 thereabouts, but it would really take severe weakness in the broad market or severe weakness in Fusion IO for this to come back and fill the gap that was created on Friday. I suspect that this might be a case. Not all gaps get filled. A lot of them do, but not all do. I would be surprised if Fusion IO were to weaken that much where the gap would fill. So at this point, again, let's see if it can hold above the 200-day moving average for now. It hit an intraday low today of 25.65. It's kind of rallying back with the market here, trading up near its session high, only down about 12 cents after a monster move on Friday. So it's looking pretty good. If you were to nibble here, I would call this, it would definitely be an aggressive buy. And like Lewis said, you'd want to keep a tight stop. When I buy a stock, I typically limit losses about 4 to 5% below my purchase price. Some cases I'll give a stock a little bit more room, but in this case, the 200-day moving average at 25.59, maybe your stop is down around the 25 and a quarter area, something like that. So that's my general take on Fusion IO, but definitely an impressive earnings report from the company late last week. All right, taking a look at crude oil today, down a little bit, down 0.2% to 92.73 a barrel. Gold for December delivery dropped $10.20, 0.6%, settled at $16.1260. Last price for an ounce of gold bullion. Check the GLD here. We'll see that it is trading near its session low, down 91 cents, 0.6% to 156.27. Back above its 50-day moving average. Probably going to see gold trading in a range here. Looks like a ceiling right now at about $160 a share, support at right around the 155. So probably gold, the GLD, I should say, bouncing back and forth between that 155, 160 price level in the near term, and certainly a breakout above the 200-day moving average would be bullish for the GLD, but that story has nowhere near played out yet. U.S. dollar index recently trading around 82.39, down about 17 ticks, 0.2%. Check in on the UUP. Deutsche Bank U.S. dollar index bullish fund. It is still struggling underneath its 50-day moving average here, and I've made no secret of the fact that I think that the longer UUP stays underneath its 50-day moving average here, the better case it is for stock market bulls. The continued weakness in the dollar should funnel more money into the stock market, and the TLT for that matter too. This is the long bond ETF, still underneath its 50-day moving average as well. So TLT underneath the 50-day, the UUP underneath the 50-day. Hopefully that's going to be good news for stocks in the near term. And frankly, with the major averages acting the way they are, they're just very hesitant to give up any ground here. I think that overall that's a good sign. Checking the yield on the 10-year note today, up a little bit, but not by much. Let's call it 1.65%, and the yield on the 30-year here, 1.65 for the 10 and 2.74% for the 30-year. Economic data this week, pretty busy week actually. Tomorrow we've got the producer price index for July. We've also got retail sales for July. That comes Tuesday before the open. On Wednesday we've got the consumer price index, Empire Manufacturing Index. That's a read on manufacturing activity in the New York area. Industrial production capacity utilization, that's on Wednesday as well. Thursday, weekly jobless claims, housing starts for July. And the Philly Fed is also out on Thursday, and then Friday we'll get the first look at consumer confidence for the month of August from the University of Michigan. These housing starts on Thursday. Got to give these home builders credit. Still watching the ITB here. Technically, it looks quite healthy actually, and in this type of technical setup, would not be surprised at all to see newfound strength in the ITB, as well as home builders that comprise this home building ETF. We've got names like Lennar is a top top holding in the ITB, checking in on shares of Lennar today. Just technically looking really solid. If you don't want to play individual home builders, the ITB is a perfectly good option. Lennar, very strong chart in the group as well. People still saying, well, I missed out on the run in the home builders. I'm not so sure about that. I think Lennar looks ripe here. Let's see, PHM Pulte Group is another one here. Just super strong. It's a $12.5 stock. I think Lennar's setup is better than Pulte Group's at this point. And then also D.R. Horton is another top holding of the ITB. D.R. Horton recently firmed up at its 50-day moving average here, and wouldn't be surprised to see a breakout over 1850. So home builders continue to look pretty darn good in this market. After the close, we're going to be watching earnings from Groupon. Not that I think it's that relevant to stock these days. In fact, it's a terrible laggard stock that has just completely fallen apart, but people interested in what the daily deals company is going to have to say. Profit is expected to come in at 3 cents a share on sales of $573 million. Groupon does not have a problem delivering excellent top-line growth in recent quarters. You've got great top-line growth. I mean, growth has been decelerating at Groupon, which is never a great thing when you're kind of a new company in the early stages of growth here. But Groupon has been losing money. They're expected to turn their first annual profit this year. Supposed to be very, very profitable next year. And again, good top line growth, but this is a stock that has just been obliterated in recent months due to growth concerns. The Wall Street Journal reported today the company is facing some strains on its sales force. Groupon employs more than 12,000 employees. Nearly half of those are in sales. Of course, they're responsible for signing up local businesses to offer these daily deals and other products. So apparently some sales force strain at Groupon. So we'll see what the company has to say. I mean, this could be an example where a lot of bad news is priced in here, and any semblance of good news could cause a big rally for the stock. Fairly high short interest in Groupon as well. Not surprised to see that. In terms of breakouts in the market, we're in a confirmed uptrend. Market technicals look pretty good. The market has been serving up some breakouts, but what's kind of tricky here is that just because a stock breaks out in heavy volume, that's one thing I look at. I want to see stocks under accumulation breaking out from good bases, but I also want to make sure that there's a good fundamental story in place at the company. And what I've been seeing lately is some really, really strong technical breakouts with volume, stocks under accumulation. But when you get down to the nitty-gritty and look at the balance sheet and look at sales growth and all that, some of these names come up short. Now, Dillard's, Dillard's is trading beautifully in this market. They're a department store. You had a big gap up for the stock on late last week. Dillard's is just down 27 cents today to 73.89. Nice breakout for this stock recently from a big long base. In fact, let's take a look at the daily chart. A weekly chart for Dillard's, and you can see just a picture-perfect technical breakout here from a base, and it's holding on to its gains from last week. The issue here is that, listen, I realize that not every company is going to be able to deliver 25, 35, 40, 50, 60% year-over-year sales growth in recent quarters, even though I do like to see, really strong growth. Dillard's, has been ranging between 2% and 6% over the past 4 quarters. So single-digit sales growth never completely excites me. Now, sometimes I'll make an exception and say, well, listen, it's a stock under accumulation. Return on equity is good. Some of these more established companies, just aren't going to be growing like they did 15, 20 years ago. So, Dillard's is a great looking chart in this market, and one that I'm watching. But again, just to kind of clue you in as to how I go about, picking stocks for the Ultimate Growth Stocks model portfolio, strong technicals is one thing. Relative price strength is one thing. But, there has to be kind of a compelling fundamental story of growth. And Dillard's is okay. I mean, it's not bad by any means, but again, single-digit sales growth is something I typically don't gravitate towards. Here's another strong chart in the market. Snap-on, hand and power tool manufacturer. Big breakout for this stock recently over 64.48. Okay, here was the swing point back here in June. Big breakout last month in July. And I like the fact that how this stock is holding on to its gains. It's holding well above the swing point here. But again, good strong chart in the market showing relative price strength. But, here you're looking at decelerating sales growth in recent quarters from 9% down to 7%, down to 3%. So, for me, it's a lot more than just a good chart. There has to be a compelling growth story as well. And this isn't to say that I will never, buy a stock with single-digit earnings or sales growth. I mean, every once in a while I will, but I just have to kind of look at the whole ball of wax here. So Snap-on, SNA, another strong chart in the market. And here's another. Going through my screens, I saw McGraw-Hill. I mean, this is a nice technical setup as well. A stock that clearly is under accumulation here. Kind of one of these defensive, more conservative plays. Recent breakout for McGraw-Hill over $48 a share. Here was your swing point right here. This is a nice little cup with handle pattern and showing price strength, showing resilience. But when you look at its second quarter earnings report, their sales were down 1% from a year ago. So, declining sales growth, again, that's just doesn't really excite me that much. Philip Morris, high-yielding stock here, yields more than 3%. Another great technical setup in the market here. Problem with Philip Morris is that there just really hasn't been any conviction volume behind the recent move, and that's been the story with a lot of breakouts, kind of lackluster volume. Lackluster volume in the broad market. Not surprising that you see some of these low volume breakouts. But Philip Morris, another perfectly, solid company here. Recent breakout over $91.39. Here was your swing point here. A stock that is still within buying range here. Okay, breakout over $91.39. Recently trading around $92.47. You're not chasing here. But again, are you buying a stock that's under meaningful accumulation? That's where it gets a little bit questionable. All right, let's take a look at some other growth stocks that are acting pretty well here and holding on to gains. Remember, I took a call last week on the show about Sturm Ruger, handgun maker, RGR. Smith Wesson is another interesting name in that group that is acting very well here, consolidating gains, holding nicely above its 50-day moving average. This is a low-price stock, trading recently at $9.73, up 1.5% today, but like the fact that Smith & Wesson is just kind of moving sideways after strength, holding gains. Swing over, take a look at the weekly chart for Smith & Wesson, and here you'll see here's the base that formed. Okay, started back here on March, April. Nice breakout, and see how it's just kind of moving sideways right here. This is an excellent technical setup. It's a good stock for the watch list right now as it trends above its 10-week moving average. If this market is able to rally more between now and the end of the year, this is a name that could continue to outperform. And Smith & Wesson, you do have outstanding fundamentals at this company. You've got sales growth that has been accelerating in recent quarters. Good growth prospects, fiscal 2013, 2014. High return on equity. There's a lot to like about this company. All right, folks, headed into the final break. Thanks very much for tuning in. Ken Shreve with you on TFNN. You're listening to Breakout Investing. We will be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks. We check on the markets here with about 5 minutes left to go in Monday's session. NASDAQ Composite down just a little more than 2 points now, still holding near its high for the day to around 3,018. The S&P 500, we'll check on that real quick. Just kind of another quiet sideways, not much of anything day in the market, but that's good. That's better than a sharp stick in the eye, right? That's better than down 2% on the S&P 500. Right now, the S&P 500 not even close to being down 2%. It's down just about 3 points, 0.2% to 1403, holding gains nicely. And the Dow Jones Industrial Average underperforming a little bit today, down 47 points, almost 0.4% to 13,161. So steady as she goes with the market. Before we went to break, talked about Smith Wesson holding gains nicely here, showing relative price strength in the market. Still like the look of ResMed here. RMD, they're a medical device maker that specializes in sleep apnea, that obstructed breathing when sleeping, kind of a dangerous disease, but that is ResMed's bailiwick. Really, again, talking about big gap up for this stock last week on earnings, holding gains smartly. This is another example. I'd just be very surprised to see ResMed eventually come back and fill its gap. It would really take a precipitous price decline from this point to do that. But impressed with ResMed, and we'll look at a weekly chart, give us a little different perspective here. No, I thought I had a weekly chart in here, but I don't. So, but the fact that it's holding on to gains smartly tells me there's good support out there for the stock. So, like the look of that name. Solar Winds, nice article about Solar Winds over the weekend, I believe, in Investors Business Daily. Another stock. They make hardware and software used for network optimization. Basically, they help networks run more efficiently. Solar Winds today up 0.5% to 55.30. Another stock that is just showing unequivocal price strength out here. Hard disk drive makers showing leadership as well. Western Digital, big gap up for this stock recently, and it just, this stock needs to consolidate. Okay, there's no way I want to chase Western Digital up here. It's up another 31 cents today to 44.30, but you can see it has multiple up days in recent weeks without much in the way of consolidation at all. We'll look at a weekly chart. I know I have a weekly chart in here for Western Digital. And what you have here is sort of the left side of the base formed right here. It's worked its way higher. Okay, what would benefit Western Digital greatly from here would be just a little bit of a shakeout. Maybe it comes down to, $42 a share. Maybe it comes down to $40 a share. It's a stock under accumulation, but this would benefit from a little bit of profit taking here, low volume profit taking, where it forms a little handle area, and then maybe that sets the stage for a meaningful upside breakout. It's trying to break out here, but rather than chase it after what could end up being 8 straight weekly price gains, that's not the way I like to buy stocks. So I'll wait and see if we get a low volume pullback. If that happens, it'll be front and center on my watch list, because I know that possible heavy volume breakout may not be far off. And finally, let's take a look at FLT. This is a little known name, FleetCor Technologies. Here's the daily chart. Gap up for the stock last week, holding gains nicely. I think I have a weekly chart. Yep, there's a weekly chart for FleetCor Technologies. Really like the look of this technical pattern as well. FleetCor is a provider of specialized payment products and services to businesses, commercial fleets, oil companies, petroleum marketers, these types of things. But a good solid growth name here with a good technical setup. Coming up with earnings, retail this week, folks. Tomorrow, Dick's Sporting Goods, Home Depot, Michael Kors, and TJX Companies. See you back here tomorrow at 3 o'clock. Take care.